Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 18th of April. Overnight, the Reserve Bank of Australia released the minutes from its latest policy meeting. The minutes reflected more or less the meeting statement, highlighting the softness in labour market indicators and that the recently announced supervisory measures with regards to lending could ease financial stability risks. As we noted when we had the meeting, this suggests to us that once these measures take effect, the bank would be more flexible to cut rates again if needed without being concerned that its actions would amplify risks to the economy. However, following the remarkable jobs report for March released after the meeting, we don't think that the bank will proceed with something like that at its upcoming gathering, scheduled on the 2nd of May. Aussie dollar reacted little at the time the minutes came out. The pair has been trading south ahead of the release and continued drifting lower in the aftermath. It started sliding after it hit resistance near the 0.76 barrier and the 50% retracement level of the March 21st, April 12th downtrend. The decline was stopped by the 0.7555 support, where a decisive dip is possible to carry more bearish extensions, perhaps towards our next support of 0.7515, marked by the inside swing high of the 11th of April. Now moving to the US, the dollar recovered some of its latest losses against the yen yesterday after the US Treasury Secretary Mnuchin told the Financial Times that a strong dollar would be a good thing in the long term. His remarks come a few days after US President Trump jawboned the currency by saying that it is getting too strong. However, Mnuchin said that Trump's remarks were about the short term and agreed that this is hurting exports. Dollar yen traded higher after it hit support near the 108.15 level and broke back above 108.80. The recovery was stopped slightly below our resistance of 109.30. Even if the pair continues to trade higher for a while, we would treat any further recovery as a corrective move, and we expect it to remain limited. Tensions over North Korea are far from diminished, and as such, headlines that could heighten these concerns further may cause the pair to turn down again. A dip back below 108.80 may confirm the case, and it's possible to pave the way for another test near 108.15. The nervousness over the economic dialogue between the US and Japan, as well as the upcoming French presidential elections, could also keep any dollar-yen rebounds limited. As for today's events, from the US we get industrial production for March. Expectations are for industrial output to have accelerated to 0.5% month over month from 0.1% the previous month. This could support somewhat the dollar. However, for the reasons I just outlined, we expect any possible dollar strength from this data point to remain short-lived, especially against safe havens like the yen. We also get building permits and housing starts, both for March. From New Zealand, the global dairy trade index is coming out, though no forecast is available. Although this could impact the Kiwi at the release, we believe that Kiwi traders have their gaze locked on the nation's CPI data for the first quarter, due out on Thursday. As such, any reaction on this index could stay limited. We have only one speaker on today's agenda, Kansas City Fed President Esther George. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.